That is Milwaukee, Wisconsin. It's going to be 75 degrees and sunny, Milwaukee, Wisconsin. I like the look of that. Check the markets, please. We're down for the Dow. We're down for the NASDAQ. I think we've got some red ink all across the board here. The Dow's off 34 points, 35,066. Michael Lee is with us now. All right, Michael, you come on this show because you're a stock market commentator. Take that hat off for a second and talk to me as a social commentator. We've got almost 11 million job openings. That's the JOLTS number. 11 million, 10.9 to be precise. Why do we have so many jobs unfilled when we've got so many people unemployed? Answer me that.
Hey, Stuart, it's a multitude of problems. I think the biggest one is the one that's the most talked about, which is this enhanced unemployment, which is running out. So I think hopefully this number will change. We also have a skills mismatch. Going into this pandemic, we had 500,000 unfilled manufacturing jobs across the country. And I think now what is going to prevent this snapback and why this JOLTS number is likely to stay somewhat elevated is that a lot of small businesses are gone. And so a lot of people who are sitting out there are saying, hey, do I want to go work at Best Buy? Do I want to go be a waitress, be a bartender when I was working for this great small business around the corner that's no longer around? This recovery has been a recovery of the largest and biggest business. And so you do have some of the smaller restaurants and kind of leisure and hospitality industry struggling to find jobs. I'd imagine as the year goes on, a ton of those jobs are going to get filled, and we're going to see some dramatic job growth, but I'd expect this JOLTS number to stay elevated. And one also thing is that the household survey data and the non-farm payroll data does not pick up is people that go out and start their own companies. So if we have people who've taken their stimulus checks, maybe they bought some GameStop, and now they're thinking about starting their own business, they're going to, that JOLTS number will stay elevated, and that non-farm payroll number, the job gains will be lower than what's actually happening in the economy.
Okay, just so long as we don't start blaming everybody and calling them lazy, because I don't think that's true here in America today. I know you're still bullish, so tell me this. If we get any kind of sell-off, will you be in there buying the dip immediately, just like you have for years? Will you do it again?
Yeah, absolutely. And not only me, you have $4.5 trillion in money markets. You have $700 billion of announced buybacks. And if you look at the state of the consumer as a whole, now debt service as a percentage of take-home income is 20% less than it was pre-pandemic. The savings rate's at or near 10%. So we are on a really good footing going forward. I'd say that the expectations for really high economic growth were always going to be wrong. I mean, Joe Biden's president, the last time he was in the White House, we had the slowest recovery in the history of the U.S. economy. But it's still, the slower the recovery, the more accommodative the Fed's going to be. These big businesses that drive the overall indexes are going to continue to dominate and take market share. So I think for your everyday investor that's buying and holding these big cap, big name stocks, you've got a good few years ahead of you.
Hold in there and buy the dip. All right. Thanks very much, Michael Lee. We appreciate it. We'll see you again. Fascinating.